How do I share? Hi Arjun, am I audible? Hi Kush. Hi Ashutosh. Okay, okay. Hi Anirudh. Can you hear me? All right. Okay. ठीक है. So now I don't know how this works. Okay. I somebody can ask a question, so then I can start talking. Hi Sanket. Please go ahead. How you pick up a stock to invest? Okay. Let's take the first one. Uh, can I share the screen? Chrome tab, Finways, share. I have to again go here and see. Can you see my screen? Yes. Okay, good. So, how do I pick up a stock to invest? So, let me go back when I was doing it like maybe first time 2018, 19, 20. I mean, I did it 2007 also, but I did not knew at that time lot of things. So the way I started picking up the stock is I I I went through some high level at that time. I think 2018 to 20. Some of the highly rated stocks were Apple and still Microsoft and Facebook and other things. Facebook was not there, not in the top. So my thinking was that I will go to my screener and I will filter each and every companies to the highest market cap, and then I try to have some sort of a vision that whether this company is going to give me 10 times return or not. Whether it takes 10 years or 15 years is okay, but whether that company can grow 10 times in the next 10, 15, 20 years or not. So obviously, if you look at it right now, Microsoft or Apple, of course, Nvidia is a different beast altogether. But if it is Microsoft or Apple, they are valued close to $3+ trillion. For them to become 10 times, it would be $30 trillion company. Country's GDP itself is 30 trillion. So it won't fit in my agenda, even though it is great company, even though it may double from here in 10 years, but it will not fit into my agenda. So when I started, I was looking for companies which can give me 10 times more money. Of course, that criteria has a little bit changed now because I have some money now. Not great, but I have some money now. So I don't look for that 10 times return. I look for more like a 5 times return. But at least earlier when I started, it was more like what can give me 10 times return. And also, not just that it can give me 10 times return, but also like not invest in something which is just an idea. There are a lot of ideas that comes in the stock market. A new IPO comes and a lot of new companies come, lot of new innovation comes. Those are all ideas. Whether they will be able to convert that into business or not, we don't know. So I try to avoid investing early on in the ideas, and I also avoid investing in companies which has already grown to an extreme level from where I cannot make 10 times money. So then my uh, considering those two criterias, then I filter it out and said, okay, what are the things which can still grow a little bit 10 times, and also it's not just an idea but execution. So I'll give the first example. The first one that hit me was Netflix. Of course, we were all using Netflix on a daily basis, and we know it is a good business. We all watch Netflix. So Netflix was my first idea, which was at that time close to not even 100 billion. It was probably 70 billion or something, and I could see that at some point in our lifetime, in next 10-15 years, it will become close to $1 trillion company. So that was the first company that I saw and uh, felt like that is worth investing. Second was Amazon. Third was Costco. Even though Costco was very high in the price, like when I started watching Costco, it was probably 120 $140 stock. Even then it was very high P ratio and very very higher stock. But I know that the Costco is the most reliable business. Like even when we go to every Sunday, we can see that it's always jam packed, and it was always jam packed uh, from the beginning. Like when I came to America in 2001, even then when we go to New Hampshire Costco, it was always full. So I thought that's another great business. So that's how I evaluate business. If I don't know any particular business or that something that um, I know only from the stock perspective, not from the company perspective. Like we know Netflix, we know Costco, we know Facebook, we know Amazon because we use it. But how many of us kind of uses Nvidia, for example, right? I know it's a chip. I know in some of the equipment that we use, the chips are used, but uh, very rarely, like at least back in 2018-19, Intel is the chip that we would know, right? When we go and try to buy a laptop, we will say we will see whether it has an Intel processor or AMD processor. By default, we always thought that AMD is like a lesser version of Intel. But Nvidia was there, but it wasn't there. Like might be like scanning through, we might have heard it, or somebody who plays the gaming a lot, they might have learned about it, but it was not a common name back, at least back. So if I learn about a company which I actually do not know, then I have to go look at some of the fundamentals of the company. And the fundamental thing that I look for in any company is the revenue. If the company is growing their revenue at least making at least doubling their revenue in 5 years. That means they are growing at least more than 20% each year, which is what I look for. I um, and obviously Nvidia, we can see that it did business of 16 billion in 2021, and now it's doing 130. So it's uh, tremendous growth, and that too in a large scale. This is like unbelievable. Of course, that's the reason it is valued at 4 trillion. But coming back to the original question, what do I look for? So this is what I first look for, whether it is doubling their revenue in 5 years or not. Second thing that I look for is it profitable or not? uh, if it is not profitable, it gives me a question mark. If let me pick a company which is not profitable, maybe DraftKings. Yeah. So, for example, DraftKings is another application. I use it personally on every year when the NFL season starts. Every year I deposit $1,000. It's fun, but whatever. It's not important what I do. But the company is not profitable. As you can see, their EPS is still negative. They are burning cash in marketing, whatever. But look at their revenue, right? Their revenue was 0.61 billion, and now it's 4.77 billion. Each and every year, they are growing their revenue. And even though they are not yet profitable, they are cutting down their cost, and each year they are becoming better. It's a matter of time that they will become profitable. So that's the second thing that I look for if it is not profitable. Of course, there are if I have to drill down more, then I go to each and every depth. What is their profit margin, and what is their net income, and even how much money that they are spending in research and development, and where they are spending more money, and are they able to cut it down. Then I open up the earnings report. The plenty of things. I don't want to like overwhelm you in analyzing a company, but at a start, if we can like dumb it down in a way, then if their revenue is growing and they are profitable, or they are showing you a hint or a glimpse that they will become profitable, then that's the company that I invest. Okay, I hope I answered the question. Second question. Where do you think Bitcoin is hiding? Any reasons, any catalyst? Nobody knows where the Bitcoin is heading. Earlier, at least, the Bitcoin was trading um, along with the dollar. Before that, it was trading like anti gold kind of a thing, like the gold money which was sitting there for years. I mean, 2 years back. Up until that, all the gold has a market cap of 17 trillion or something, or at least it used to be. So that's a big chunk of money. And at that time, Bitcoin was probably not even 1 trillion. So some of the money came out from gold, and they called it like a digital gold, and that's how it came to Bitcoin. Second, of course, it was kind of a dollar replacement in the second cycle. Now it's not even a dollar replacement, because dollar is kind of going down since at the start of this year, and Bitcoin is going up. Now the reason is that, of course, the U.S. government is dumping money, and each and every hedge funds are allocating almost 1 to 3% of their money. So a lot of smart money is pouring in, and it has some level of use case at some point. Whether it will become actual business to people or not, that is yet to be seen. It's a big gamble. uh, how the buffet would say it, right? Uh, is It's the same way the gold was traded get got traded for hundreds of years. It's who is the bigger fool. There is no value underneath. You are just buying based on the demand and supply. You are just assuming that you bought that Bitcoin for 100,000 today, and at some point in the future somebody will buy that Bitcoin from you at 200,000 or 1 million, and that's how you will make a profit out of it. But there is no underneath the business, like when I say underneath business, like Apple for example, or Microsoft for example, or even if you have a real estate that has a house or something, it is it is backed by something. Bitcoin or gold is not backed by anything. It's backed by uh, who is willing to pay more money. Uh, but I don't think it's going to go to zero, at least not in our lifetime, because too much of smart money has been put in. Um, we'll see. There are cases where they say that it will go to a million. I don't know. Maybe it has to settle down a bit. It's too volatile. It has to settle down at some point of time, and then we can try to visualize whether it will go to a million or not. But the only thing I would say is, for me, my 2% of my money is in the crypto. It's equally divided between Bitcoin and Ethereum. I was buying $2 of Bitcoin from 2022, and $2 of Ethereum, and now I am buying $3 every day. I'm going to continue to buy it until it hits $10,000 of my money in both of them, and then I will stop it, and then wherever it goes, it goes. Okay, next. Golden Cross. Okay. Mm, today I saw in one of the stock where it became a Golden Cross. Trying to find which one. Now it will not click me. But the Golden Cross at a fundamental level is when a 50-day moving average crosses the 200-day moving average. So if you look at this particular chart, there is this green line which represents 200-day moving average. What it means is, say a green line price here, if you can see, it says 39.01 for DraftKings stock. What it means is, last 200 days average price of this particular stock is $39. And what the 50-day moving average here is, the average price of this stock for last 50 days is $37.60. So when the near term moving average, in this case 50-day moving average, crosses the longer term moving average, which is a 200-day moving average, when it crosses that, it tells you that there is a momentum in the stock. What it, in a simple words, that in last 50 days there are more buyers for that particular stock that has came in compared to the last 200 days, right? 200 days is what, 6 month, 7 month kind of a thing. So compared to last 7 months average price, last 2 month average price is like kind of taking over that in the chart, which means in the near term there is a momentum in this stock. That means there are more buyers that are coming in, and usually when that happens, when that golden cross happens, it gets triggered in many of the charts in what the technical analysts are keeping an eye on, and then it brings more firepower and it jumps the stock to sometimes 10%, sometimes 20%, depending upon the stock and some other various factors. But it usually is a good sign near term for that particular stock. Okay. Do you have any signals for daily trades? Yes, I do. So every day when I log in and I sometimes pray, please don't ping me between 9:30 and 10 because there are there are 100 things going on in between 9:30 and 10. Um you get I have two of my trading portfolios which I have to manage where usually there is like 15 positions in one portfolio and maybe 5 or 10 in another portfolio. So I'm trying to adjust if I have to sell something, if I have to buy something, and I have to quickly see the chart of my stocks and how they are doing in that particular day. I also have a window open for a cheddar flow where I am seeing the options flow every second. If there are any option buying is happening, then I have already like in the pre-market I have scanned through all the news, the analyst upgrades and various other parameters on what might be driving today's market. And then when the time permits, usually it's about 9:45, 9:50, I go to the screener and I filter it based on the market cap of over 300 million. I don't want to go to penny stocks. I don't go to anything which is below 300 million. There is a reason for that. Maybe that explanation later, because it can be easily manipulated. If it is, say, a $50 million stock, um, usually there is like a 5 million worth of stocks that gets traded. Anybody with $1 million will come and the stock price will jump 10% up or 10% down. So you cannot usually uh, be usually make sense of what that stock is going to do. So I at least filter it based on over 300 million, and then I look for relative volume. Usually, relative volume of over 0.75 is a good volume. Uh, 1 second, I'm going to drink water. Anything over 0.75 is good, but over 1, that means there is a good momentum in that particular stock. And then I go to this particular tab called technical, and then I look for change from open, and then I filter it based on which particular stocks are higher after opening. So it does not mean the pre-market, if it was up 5%, it doesn't count. It's after open. That means after the market opened, whether that particular stock was bought or not. So I filter it based on that, and then I scan through some stocks. And when I scan through some stocks, immediately in the first 20 or 25 stocks that I scan, I will get a feel of the market that there are certain similar sectors are up. If it is, then that's the stock I will pick. But that means it's not just only the momentum in that particular stock, but also in that particular sector. And then I just scan through uh, like this a mini chart, I would say. And since I I have little more experience of reading maybe 1,000 charts in a week. I can quickly make out which one will make sense to me, which one will not make sense to me. Like, for example, you can see this chart, it will clearly attract me because it is making higher highs and it's also breaking out to more and more high. I can also see more and more green candles in the volume as well. So that would attract me, and then I will go and look for that particular chart in more details, and then I can see it is breaking out. Then I will quickly look at, is it like a valid company or not, is it making some revenue or not, was it profitable or not, etc., etc. And then if it makes sense, if RSI is not so strong, then I will buy that stock. And That's how I trade in the morning. Okay. If you can share some guidance on how to learn about chart analysis, what parameters to see and follow, some tools. Uh, sure. So, usually, coming back to the DKNG, usually when I look at the chart, uh, I go to, so there are the chart has two things, right? One is the price, which is listed here, and the second thing is the time frame. So there are different time frames. There is a monthly chart, there is a weekly chart, there is a daily chart, there is an hourly chart, there is a 30 minutes chart, there is a 15 minutes chart, there is a 5 minute chart, there is also 1 minute chart. I hope we don't look at 1 minute. But um, if I have to initiate a trade which is for longer duration, um, longer duration meaning anything in between 2 years or 5 years, then I look at the monthly chart because that's the longest time frame available. If it is between 6 months to 2 years or 3 months to 2 years, then I look at the weekly chart. If it is in between 1 month to 6 months, then I look at the daily chart. If it is anywhere between not 1 day, but 1 week to 4 weeks, then I look at the hourly chart. If it is like a very, very short term trade, like intraday trade or uh, something that I'm going to buy and sell it tomorrow or day after tomorrow, then I look at the 15-minute chart. So that's how I decide. For example, and then let's assume that I'm going to make a trade for something that I'm going to hold for in between 1 month to 2 months or 3 months. I'm going to look at the daily chart, and what I look for first thing is that is it over some of the critical moving average. So these are the moving averages. It is 5, 9, 21, 50, and 200. If it is below 200, I really like don't touch it. Uh, uh, Usually, when a stock is trading below 200-day moving average, that means it's in its downtrend, and there are always in every pop there are going to be sellers available to sell it. So I try to avoid it. 50-day moving average indicates a momentum. That means in last 2 months there are more buyers. As long as it is above 250-day moving average, it is a good stock to get into, uh, at least for the trade perspective. And if it is above all the moving average, that means it's brilliant. And then Finviz by default creates some kind of pattern. For example, in this particular stock, you can see that there was some amount of high made in February, this year, and then there was another attempt to break out and go higher. So there was another high made last month, and then it got sold off. So it connects this first high and second high and kind of draw a line. And when it breaks out of that particular line, that means it has, you can see there is no resistance in front of it. So there are no sellers sitting until it hits this particular area, which is 53. So I'm not saying like, okay, you go and buy the stock for 44 and it's going to go to 55, but there is a high chance of that happening in this particular stock. Usually it is not this obvious. Sometimes when it is this obvious, it always correct itself. It kind of test you to be a weak hand, so it will come back and try to test the near term moving average, which is 5 and 9, and then again it will go higher. But this is like one of the good possible trade, where you buy something in the 40s and you can sell it in 50s. You can make easily 15-20% in 2 months or 3 months time frame. So that's what I look for. I don't know if I'm answering. What is a breakout? Good question. Trying to see what was the last time I. You can consider even this DraftKings is also a breakout, but I'm trying to see like a big monthly breakout chart. Um, Let me see. Spy. So for example, so there are two breakouts, okay, here in this particular chart. This is a SPY, our S&P 500. So when it hit the high in the February and then it went down and then it tried to uh, again keep on going higher somewhere in the momentum in May, and then that momentum kind of stopped, and then there was a retest of 200-day moving average. You can see this green line, 200-day moving average, and then it again tries to get out of that zone, and then again it could not. And over here in this particular candle on June 3rd, it broke out. So uh, you can draw a line from that February high, and this was the second high, and this was the third high. You can draw a line connecting those three dots, and when it breaks out of that line, that means it's a breakout. So usually the breakout stands, and the best thing to do when it breaks out is not to buy immediately, because every time there is a breakout, there is also going to be a period where it will try to retest that line. So this was that retest, and even though it did not touch exactly this particular line, it touched the 21-day moving average and then bounce immediately. But in that retest is when you buy. Uh, this is like a confirmation kind of a buy. So that's one type of breakout. Also, there are breakouts when you see here it in December. December, what do you call it? December 6, there was a high of 609 something, 610, somewhere around that. And in this year also, January 23, it was 609. So it kind of formed like a double top. And it again tried to break that in February 19. It tried to break it. It went to 613. So it in a way break it, but then there was a correction. So in a way, there was like a three top in a very similar zone, like 609, 610, 613. So it sort of formed a multiple top, right? Three times it formed the top. So when it when the price of that particular stock goes above that value, which was 613, which happened in last month, June somewhere. That means it broke out from that particular resistance area, and now it is like a clear sky kind of a thing. Like now we do not have to deal with the sellers that we found in December. We don't have to worry about the sellers that we found in January or February, because whatever those sellers were who thought that we are overvalued and we need to sell, those selling whatever the amount of stocks that they wanted to sell are they that is done, and there are enough buyers in the market to keep the stock price over that particular resistance zone, and we will have more and more buyers on the top of that area. Okay. Uh, sorry, I lost where was I? I have been DCA $5 daily from your list and picked up 9 stocks, Nvidia, Baba, Amazon, blah blah blah. Should I continue to those 2 3 years? Is for long term. Sure. Nvidia, Baba, Amazon, Uber, Palantir, Okta, I have some doubt, even though it is in my top 10 stocks in today's list. But more and more I read about Okta, I have created some amount of the doubt has crept in whether there was an issue that happened 3 or 6 months back. Somebody penetrated their system, and I don't know how serious it is, but there are question marks on Okta. Hold definitely, Costco yes, DKNG yes. So yes, if I would, I am, and I think others should too. How to find best stocks at discounted price? So first part of that question is that how to find the best stock, right? The best stocks are the ones which are growing their revenue uh, each year. Hopefully, at least 20% growth is there in their revenue. That would be considered a best stock. And when to buy that is look at their chart and look at their moving average. Usually, when they are either near to 50-day moving average or 200-day moving average, or that's a good place to buy those stocks. I think there is a quote from Charlie Munger that if you buy quality stocks at 200-day moving average and do that consistently, you will beat each and everyone out there in the market. Difficult to show that kind of a patience for average investor, but that's one of the preferred method. Assuming you are not doing the dollar cost average like how I would do it, then the price does not matter. Sorry, I am not used to speaking. Given that the market is currently experiencing a strong rally, how should I approach my investing and trading strategies based on historical data? So yes, market is experiencing a strong rally, no doubt about it. Very difficult to invest in some of these high quality stocks at this price level. For example, Nvidia or Palantir or um, I think Amazon is fairly valued, but Hood or Uber, they are a little bit higher valued comparatively. So uh, it's difficult to if you have not already invested in them, it is difficult to convince ourselves to put our money in those stocks at this level. The best is to wait it out, and see when there is enough correction in those names, and then get in, unless you are doing the dollar cost average, which is my preferred approach. Then it doesn't matter. Like you're going to buy, for example, Nvidia at 160, it may go to 80, and you're going to buy at that price also. So it doesn't matter. Your average price is going to be 120, 140, and then it will not matter. So that is one thing. But at this, having said that, right, there are plenty of stocks, like mind-blowing amount of stocks which are not high valued. Baba is one of them, right? Baba, if the relationship between China and America settles down, I assume it will at some point. They cannot just keep on fighting forever. Whether it will happen in 1 year, 2 year, 4 years, we don't know. But at some point, it will settle down. And China is growing. Baba is growing. It's easily in 10 years, it is going to be $1 trillion company, and it's valued at what, 200 billion right now. That's 5 times money. That's very undervalued right now. And similarly, there are so many stocks that you can find when you scan through, and I do find them, and then I put them in the long term chart. Uh, the Main Street is actually struggling. The Wall Street and Main Street are two different things. Main Street is the common people, the common small and medium business owners who takes the loan, and they are paying very high loan because the interest rate is high. They are struggling to do their businesses. Uh, Maybe not all, but many of them. So Main Street is struggling. So many stocks which are depending upon those businesses are struggling, and they are not yet high valued. But the AI based stocks or chip related stocks, because Biden had that funding given to many of the chip stocks, so there is a lot of money that has poured into those sectors. And of course, the tech is also working, but not everything is working. There are some stocks available at a cheaper and discounted price, which in when you move forward to 5 year, 7 year period, you will see that those stocks have appreciated much more, and you have to find them and invest in them. About the trading, as long as you have a system in place, you can trade any stock, even Nvidia or Palantir or whatever. You just have to have a system. You have to respect your stop loss, and you have to respect your levels at which you want to take profit. Um, 2% stop loss, 4% profit, 4% stop loss, 8% profit. Whatever your system says, uh, it will work no matter what the condition is of the market. But you have to work on that system, and that system is something that you should be comfortable with. You have to design that system for yourself. Nobody is going to come and design it for you. It is individual thing. It is your risk appetite. It is your portfolio size. It is how much you are willing to take risk. So it depends upon each and every factor. But if you have once you have a system in place, you can trade in any environment uh, and be profitable. Uh, how do you judge that the company has grown and it's not that good to invest in it? Uh, so this is a little controversial topic. For example, so Like when we look back 20 years down the period, right? 2001 to era, uh, the 20 companies that were top companies were what? AOL, G, Yahoo, Exxon, Microsoft. Uh, there might be some names I'm missing, but whatever those 20 companies were, out of those 20 companies, only maybe Microsoft survived. And Exxon survived, but it's probably at the same level as it was back in 20 years. So you kind of did not make any money. Intel did not survive. Many companies did not survive. So every 5, 10, 20 years, when we look forward, whatever is at the top today may not be at the top 20 years down the period. Maybe there will be two or three, but not all. Um, and it is very difficult to assume that that company is no longer going to grow. I have wrote a blog about 6 or 12 months back, and I believe that Apple and Google is going to be the two companies which will not survive in the next 20 years. So again, it's a controversial topic because there are going to be Apple fans. I do have Apple MacBook. I have iPhone. Very difficult to say how can you say Apple will not survive or Google will not survive. We are on YouTube, right? These are big businesses, good businesses. These are best of businesses. How will they will not survive? But I don't see them surviving. I don't see Apple innovating at all. Apple iPhone kind of peaked in 2015-16 era. After that, they are just changing the cameras, and there is a very lack of innovation. Compare that to other companies, right? Look at the innovation that maybe Amazon is doing, or Nvidia is doing, or even for that matter, Tesla is doing, or Netflix is doing, or other companies are innovating much more, and that is why their stock is getting rewarded in last 3 4 years also more. Microsoft is doing fantastic job. Their acquisition of ATVI and other things. Um, so I feel Apple is a case of Sears when we look back 20 years. Google is also could be another one because their bread and butter business of search engine. I do not remember when is the last time I went to google.com and search. I use either the Meta AI or ChatGPT. Uh, so that will impact them. Yes, they have other businesses. There is a YouTube and there is other things, uh, but it's not that they will become a zero. But uh, if you fast forward the next 10, 20 years, the money that you will make in other companies, whether it is Palantir or Uber or Airbnb or other, even Nvidia, for example, a lot of other innovative companies which are doing the innovations and making the progress as a company, they will do much better job and they will survive rather than these two companies. But it is a controversial opinion. It is difficult to say. It's just something that we have to work on. We have to see. We have to feel, and then decide. Thank you. Thank you. How do you select option? Um, so today I wrote. See, options is a very dangerous thing. Okay, I tell you, I have lost $200,000 in options, and I know it is extremely painful. It puts you down mentally. that you sometimes it's very difficult to recover from. And I know the kick that we get, right? Like I know I also share sometimes those option wins in a group. It's a great kick, right? You put $200 in 10 minutes, it give you $800. I mean, where else you can get that kick? But it's okay to do that. Once you have grown your investment portfolio to a certain good extent, you have secured your future. Uh, you have a bigger trading portfolio as well. You have some other investment in your life, and then if you do option as um, like I don't want to use the term gambling, but it is a sort of a gambling. Um, uh, you do it with like your peanuts money. Like my account, I don't want to brag it, but my account has grown large enough that every day basis, either I am up $5,000 or $10,000, or I am down $10,000 or $20,000. So when I play that options of $200, it is really not going to impact me mentally or in my portfolio or anywhere. So that's why I do it. Otherwise, I would like if you are thinking that through options trading with your 20,000 or $25,000 portfolio, you're going to become millionaire. Stop dreaming. It in a bull phase, you will grow your $25,000 to $100,000. I know people who went to $3 million. I have seen their account that they had $3 million in their account through options trading, and it all got wiped out. I am not kidding. It's a very dangerous game that you are playing. Uh, Please respect. It is too dangerous. You will not know when to stop. It is an addiction. You cannot live without. I know that, but control that urge to a minimum. Control that, play it with the money that you can afford to lose, just for the fun sake, because it's very, if you are a smoker, you can't quit smoking. So it's the same way, but control it is what I would say. So sorry, I went off topic. How do you select option calls? So first of all, um, so usually nowadays I buy leap calls, which leap calls is where the expiry date is 2027, sometimes June 2026, but there is enough time given for that option to expire. And normally, what I would do is, say for example, there is recently I bought that BYND. That's a junk ticker. Okay, that company has not worked. It's not profitable. It's a junk ticker. But it was showing some promise, and I don't want to even like buy 100 stocks and just forget that I put $300. I don't want to do that. In that circumstances, I will buy like a three call which will cost me $100 and give myself enough time frame like 2027. So if it is going to work, it will give me plenty of money. If it is not going to work, I did not like track that stock in the trading portfolio or investment portfolio, and I just allocated very small amount of money. The second type of options that I buy is like a momentum driven stocks like this Oscar or what's another Rocket LB, or there are some stocks which are showing a lot of momentum, and then I see the option flow, and then I give myself again a little bit of more time, 1 month, 3 month kind of a time, and I try to go in the money as much as possible. Um so I'm not trying to say like I'm gonna put $200 option and I want to make 1,000. I'm more into now. I'm gonna put $600 so that it becomes $800. Um, so that. those are the some of the options I buy. And then in the intraday, sometimes I look at the SPY chart. For example, if I'm looking at SPY chart and I go to this 15 minute chart, and every time this 15 50 day 50 sorry 50 line for in a 15-minute chart, if it is below that or over that, if it is over that I buy a call. If it is under that, for example, it went under this on July 7, I think I was not in front of system, but this would have been a perfect opportunity for me to buy a put, and I could have put maybe 200 or $300, and that would have given me 600 or $700. So this is my intraday trading on the SPX that I do on the options. But I have limited myself in the options trading nowadays. But that's how I would do it. Uh, what technical indicators do you suggest to use for monthly trading, a moving average? How do you decide if it's time to sell a call option for profit after buying it? So usually if it gives me 100% return, I'll just sell it. I don't wait for it. The second, right, I look at the stock chart and I see that if it is hitting some kind of a resistance level, where I know that it's very difficult to go past that level, then I feel that there is no point keeping that call option. Then I will sell that call. Do we need to balance our portfolio like Walmart, CMG, Chipotle, Technology, Pharma? Yeah, we have to diversify. Um, but within the diversification, right, pick the sectors which has shown considerable amount of growth. I believe I am more like a growth investor rather than a value investor. If you are a value investor, you would buy companies like Disney, Walmart, Verizon, Cisco, etc., like a value companies, which are good companies, good balance sheet, which will grow 10%, 12% in a year, and which that's a value investor. Some are dividend investors like Pepsi and other things. I'm a growth investor. I need to see growth. I want to see my money getting doubled in 5 or 6 years. So I look for a company which are growing, uh, and usually that growth uh, does not happen in say real estate related companies or material related companies, or even oil stocks for that matter, or energy companies. Very rarely, or consumer staples company. Very rarely these sectors have given growth companies. So other sectors such as consumer discretionary, like a shoes company or a restaurant or a hotel or a travel industry or a technology company or a chip company or a software company or a Uber, like a transport level company, those companies will give you better growth. And there are enough sectors out there, cybersecurity also one of them. So you can pick one companies from each sector, and that's how we can diversify. Okay, guys. Sorry, I took whatever questions I could. I went over 10:10. Thank you so much for joining. I don't know when we will do again, but whenever I get some free time, I will try to answer any of these questions. Thank you for joining.